that your high income does not build wealth. So, what then builds wealth? What then builds wealth? That's what we want to talk about today. So, welcome every one of us. Um, welcome. Your high income doesn't build wealth, does not equate to wealth. So, once you understand that, you would realize things will be so different. Things would be super different for you. So that's what we want to talk about today. So, what then builds wealth? If your salary does not build wealth, then what does build wealth? What does build wealth? Right. What does build wealth? What does build wealth? Your salary does not build wealth. So, what does build wealth then? Okay. So that's what we want to talk about today. What builds wealth? If your salary doesn't build wealth, what builds wealth? Okay, that's what we are talking about today. What builds wealth? What builds wealth? Let's talk about it. What builds wealth? If your salary doesn't build wealth, what builds wealth? So, because your high income doesn't build wealth, we already established that. So, welcome. Thank you all for sharing the live. Let me turn on the music. That we keep showing up, right? We keep showing up. Absolutely, that's the way to go. We keep showing up. So, today it's about your income, your high income it does not equate to wealth. It does not equate to wealth. That's what we are talking about today. So invite your friends. Welcome. Your high income does not equate to wealth. It's not wealth. So once you understand that, you see things will be way better. But a lot of times where a lot of people make mistake is they equate that income to wealth, right? And that is why a lot of people are stuck, right? And let us talk about that today, okay? Your income is not the same thing as wealth, right? It's not the same thing as wealth. So let's talk about that today. Welcome. Thank you for sharing the life. All right. Thank you all for sharing the life. Let me just thank you for sharing the life. Let's get the music on so we can have the energy. Income, our income does not equate to wealth, right? It's unbelievable, right? Yeah. Our income does not equate to wealth. Our income does not equate wealth, right? Do not make that mistake. A lot of people always, this is one of the biggest mistakes people have. They would think that, I mean, you will think you will think that your income, because your income is high, you should be wealthy, right? That's what we're taught. But guess what? Your high income does not equate to wealth. It does not. So welcome. That's what let's talk about. So if your high income does not build wealth, what then builds wealth? How can you build wealth? Because a lot of us, we were taught one thing: go to school, get a job, become an earner, high earner, right? That's what we're taught. Go to school, get a job, right? Get a good job, pay bills. That's what we were taught, right? But then Dr. Lina is saying today, your high income, it's not wealth. It does not equate to wealth. So what then equates to wealth, right? What then brings about wealth? Asset brings about wealth, right? Then what sort of asset? What do we mean by that? What do I mean by asset being builds wealth? First of all, whenever you probably would have had friends or family, right, where they would say, oh, or it could even be you, that, oh, I make so much money, I make the same money, but I'm still staying stuck when it comes to finances every single month, right? And that's because wealth is not built with your salary. It's not built with your salary. What then builds wealth? Asset, cash flowing asset. And I'm going to go quickly today on this, right? Thank you for sharing the live. Thank you for the follow. What's going on? Yes, we're talking to you. I'm just telling you, high income does not equate to wealth, right? That's what is going on today. How are you all doing? Welcome. Thank you for sharing the live. And if you haven't subscribed, you are just meeting me. I'm Dr. Lina. I'm not a doctor of medicine, I'm a doctor of technology. So I'm a doctor of business and technology. I'm a serial investor and I help professionals build wealth the right way. So if you are one of those people, you've been trying to build wealth, then you just met the right person, right? Because here we talk about, one thing, the myths is what we break. High income should give you wealth, right? But no, it does not. So let's get it done and let's talk about it today. Thank you for subscribing. If you haven't subscribed, thank you for sharing the live. Because something that is differentiates the wealthy and the middle class is one thing. The wealthy, they are more like wealthy focuses on ownership. But guess what? The middle class focuses on earning. And that already tells you something. Regardless of how much you're earning, right? Your income is 300,000, is 400, whatever you are earning. High income, it means that it does not equate wealth. Can you say hi? Okay, hi besties, how are you? Hi besties, how are you? And subscribe if you haven't done that. How are you? How are you? Right. So what then builds wealth? If your high income will not build wealth, what then builds wealth? That's what we want to talk about. Assets that are cash flowing, right? So if you have not subscribed, you want to do that. And if you see that prior to, you see some of the videos that I have, especially on the YouTube side, some of the videos that I have, it talks about so much of these assets right here. So what are the assets that helps you, okay, to build wealth? If your income, if you are just earning, if that does not help you to build wealth, and it's assets, cash flowing assets, it's what helps you to build wealth, right? So let me say something that might sound very, very, very controversial. A high income does not make you wealthy, because there are people making 200,000 that I work with, even more than 200,000 at times. They're still living paycheck to paycheck. What does pay? Why do they live in this? And you might be saying, oh, you know what? It's because of their spending habit. Is this? Is that? But no, it's because whenever you are, if you are, whatever requires you to be there, it requires a person to be there, right? That particular, anytime it requires a person to be there to earn income, what that simply means is that if you are not there, you're not making money, right? So what does that simply mean? It means that you are living by the paycheck. If all that you do is whenever you work and you take that money, you use it to fund lifestyle, that's what you do, right? What you're just doing is you're just funding lifestyle. That's all that you do. Because what that means is you're trading your time for money. And let's assume your job is not there tomorrow, or you are not or your job is not there tomorrow, or you cannot work tomorrow, what happens, right? That is what paycheck to paycheck really means, right? It means that you're using it to fund lifestyle, and that's it. Then you work again the next month, you use it to fund the lifestyle. There's no reserve, there's no investment, there's no other sources of income, right? In that situation, what you see is that you are just living paycheck to paycheck, and that's not the place to be, because it's a very, very risky place. And regardless of how much you earn, right? It's not well. 200,000, 500,000, high income. This is even a very terrible, at times it could be a terrible place a terrible spot to be, because once you cross the 200, 150, 200, you think that you have arrived. Then you realize that, oh my goodness, you haven't arrived, because your lifestyle, everything. I have medical doctors that are some of my clients, high income earners, but they are just living by the day. Why? Because they have expenses, they have college loans, they have all of those bills that are piled up, that it's already equated to this income right here. So it just simply tells you our income alone does not build wealth, okay? It definitely does not build wealth, because there's some people that make less, right? Make less than 200,000, right? They make less money, less than 100,000, and if they handle it very well, those particular group of people are going to make more money. They will make more decent, they will build wealth. because it just helps you. So let's put it into perspective. Somebody earns, this is earning, right? Somebody earns 200,000. Another person earns 100,000. Right? Definitely 200,000 is way more than 100,000, right? We know that. So if this person's expenses, right, this is earning. If this person's expenses, earning. So that's the income. If this person's expenses, on the other end, the person's expenses is, this person is, so I'm making a point here. This person's expenses, this person earns 200,000. This person's expenses is 180,000. But this person's expense is, lifestyle is 50,000. This person right here is wealthier. Okay? So let's take the difference. The difference between the two. The difference between the two is what? The difference here is this one has this one makes, no, this is 100,000, right? That's 100,000, right? That's 100,000 right there. So this one would have a deficit. It has 50,000 at the end of the year, at the end of the month, or at the end of the year. This one, on the other hand, has 20,000. Now, who is richer? Who is wealthier? Of course, this person is much wealthier. This person is much wealthier because this person's no, this is 80,000. Yeah, 180. I'm correct. So this person is 100,000 minus 50,000. That is supposed to be the other way around. So this would be 50K, and this one will be 20K. Thereabout. That's the difference. Now, who is wealthier? The number A or number B? 20K versus 50K. The leftover. Definitely A is wealthier. Definitely B is wealthier. B has 50,000 in reserve. Why? Why is B wealthier? Because all of your expenses, expenses is almost like it's a throwaway. It is a throwaway. It's gone. But it's what you keep. And that's why I always say that it's not about what you earn. Really, it's about what you keep. Right? So you can be earning 200,000. If your expenses is 220,000, you are even at a deficit. And if somebody is earning 100,000 and he just lives on the 50,000, and take that 50,000 that he has right here, why do I know? If that person if B takes his own 50,000, 50,000, right? Take that 50,000 and invest it in cash flowing asset. Okay, cash flowing asset A, they put the same amount in the same cash flowing asset. Of course, 50,000 in a cash flowing asset and 20,000 in a cash flowing asset. This person can definitely be able to buy a property. This other person would still have to wait another year or two to be able to actually fund it. That's the difference, right? To be able to do it. So and by year two, A would have had maybe 2 properties. By year two, A would have had two properties. B, on the other hand, will only have one by year two, right? By year two. So, and that's the difference right here. So it's not about how much you earn. It's about how much you keep. What really helps you is if what you earn, you are now disciplined with it, right? You earn good income and you have the same mindset as B, right? Where you are keeping your bills as low as possible. What you realize is that you are very disciplined. You are not allowing lifestyle inflation to take over. You are basically making sure that you are you are working on your income is increasing, your income is high, your expense is high. That difference here, and you take the money you are investing in cash flowing assets, you definitely see that you would see growth, and you definitely realize that you can end the paycheck to paycheck cycle. So that's really the difference here, right? Because some people make money, they make less money, but then they build wealth. They build wealth. Wealth is how much money you can, wealth is not about how much you earn. Wealth is about how much you keep and how much you basically invest, right? How much you keep and how much you basically invest. Let's keep tapping out the life. Let's share the life. Let's invite our friend. And if you're yet to follow, let's do that. All right. So why do people struggle with their income? Why do people struggle with their income? Right? Why do people struggle to create wealth? Number one reason is, give me 1 second. So let's take out this one. Why do people struggle with their income? Why do people? The reason why is that lifestyle inflation. All right, everybody knows that. Lifestyle inflation, lack of strategy, or lack of education, right? Those are part of the reason why people basically struggle with building wealth. And the reason why income does not equate to wealth, number one is, if income stops, what happens? When income stops, income can stop at any time. At any time. 2 weeks ago, Oracle laid off 30,000 people overnight, or it just took an email. People were not able to, just an email. Some people have worked 30, 25 years, 10, 20 years in that company. Thank you all for subscribing. Thank you for the follow. And thank you for all of tapping out the live. Thank you for tapping out the live. Thank you for sharing. Thank you for subscribing on the YouTube side. So if income stop, if you stop working, your income stop. So if your income stops when you stop working, that's number one, right? That's why you cannot build wealth. It's not sustainable, right? Number two is, there's the lifestyle inflation. This one is pretty popular. Lifestyle inflation, more income spending, and then of course it comes with, more income, then there's also more spending. Basically, as it speaks, more income, more spending, right? That's part of the things that you get to see, right? Income stop, money stop. That is the problem when it comes, you are just relying on income, on your income. Income stop, lifestyle inflation as well. The other is no asset conversion. So you take the money, no asset conversion. That's the other thing, right? You just basically take the money. Those are things that are making, that is on making you not build wealth. Why you cannot build wealth you may not build wealth with high income, right? Because if your income stops, of course, if you stop working, your income stops. Your lifestyle inflation, no asset conversion. You just take the money, you put it in a savings account right there. You realize that your money is just there, though it's just not working. It's just basically you are just struggling. Then another thing is, a lot of time people just earn and then they don't convert it, which is what I have here when you say no asset conversion. So what actually builds wealth? Now that we have talked about, issues of establish the fact that your income does not build wealth. So what builds wealth? What builds wealth? Okay. So what builds wealth? And I'm going to clean up this. What then builds wealth? What builds wealth? Okay. What builds wealth is basically your assets, cash flowing assets. Like I have it right here. Cash asset that cash flows, that is what builds wealth. So, and what does this simply mean? It simply means that any form of asset that you put your money. So think about it. Your extra that you have from your income, that extra that you have, where do you put it? You use it to buy asset, right? And then this asset will generate income. So now this is where you are putting your money to work, right? And what are those assets that you can put your money in? One of the assets that I always talk about, or Money Talk with Dr. Lina, that we talk about, number one is ETFs, because you have to put it in the right places. ETF is one place where you put your money, and you can be sure that, okay, in few years, you will be your money will still be there. Your hard work will still be there. ETFs. What is ETF? ETF simply means exchange traded fund. Funds. That's what it is. And ETF simply means it's a basket of stocks, right? Stocks are investment, right? ETFs are basket of stocks. So what are stocks or what are shares? So stock shares, you probably hear that interchangeably. Stocks are basically a share or a form of investment in a company. So instead of you buying, you want to go buy a business, right? But you can say that, you know what, I'm going to use some of my money to get a portion of this company, right? So think about it. Okay, it's for coffee lovers, right? You like Starbucks, you say, oh, you know what, let me buy a portion of Starbucks, right? Become an owner. Remember, we want to move from being an earner to an owner. And let's keep tapping out the life. Let's keep tapping out the life, right? Let's keep doing that. And thank you all for sharing. So you want to definitely, so first of all, you want to like, okay, I want to own part of this company. I want to be an earner. So what does this mean? It mean, I mean, I don't want to be an earner. I want to be an owner, right? I no longer want to be a consumer. You know, you don't want to be an earner, you want to be an owner. You don't want to be a consumer, you want to be an owner. Always have that mindset shift, right? Change that mindset about being a consumer. So when you consume Starbucks, think about how can you own Starbucks. When you consume iPhone, right? Always think about how can you own Apple, right? You like Amazon, how can you own part of Amazon? That is how the mindset that would help you build wealth, right? That is the mindset of the wealthy, right? Always think about ownership rather than an earner, right? Two different. That's it. It's one of the video that I have posted today. All right. So ETF, exchange traders fund, is just how you can. It's a basket of stocks, right? Stocks is you having ownership of a particular company, right? So stocks are basically investments in companies. So with your $1, you can say, okay, you know what? I want to buy a part of Amazon. I want to buy a part of Starbucks. I want to buy a part of this company, whichever company you like, right? That is stocks, right? With your $1, $100, a million, whatever, you can buy the units that you want. You can buy fractional shares of ETF. Then on top of that, what is now ETF? ETF is now a basket of all those multiple stocks. So, you know, we talked about Starbucks, but you also like Coca-Cola, you like Amazon, then you like technology, which is NVIDIA, and then you like, you know, just a basket of everything. You can say that, okay, you can simply say, okay, I only have $100. With this $100, I want to buy the entire US stock market, like with your $100. What does this help you to do? It helps with diversification of risk. What does this mean? Diversification of your or spreading of your risk simply means that if the stock goes down, instead of if you put money in one stock, if it goes down that you can lose your money 100%, you are spreading your risk across multiple companies. So think about it. The stock market went down at some point because of, you know, the price of gas and what was happening in the Strait of Hormuz and the arrest in Middle East and all of that, right? That happened and everything went down. But guess what? There's some stocks that were actually going up, went all the way 30%, 40%, even within that period, like energy stock, like Exxon. You know, all of those ones were going up because they were actually benefiting from that sector because the gas price went up. So obviously everything within energy was going up. So now think about it. If you are bought maybe every other one stock that went down all the way, tech was going down, right? It went all the way down at that point. It was impacted. It means that you probably have lost money if you sold it. However, with ETF, because you not only have energy in that basket, you have energy stock, but then you also have technology, and then you have retail because people are still buying. I mean, you have all of the different sectors, education, you have real estate, all of them inside one basket. That is how you spread your risk and you diversify your portfolio. So diversification is a very good strategy whenever it comes to investing, because I know one big problem or the main thing that I hear every time is, Dr. Lina, where should I invest? How should I invest? Which stock? And I often say that, but I'm not God. There's no way I can know it. I mean, there's some people that check the charts and do all of that. I don't have the capacity for that. So what do? I do what the multimillionaires and the billionaires do, which is invest in a basket of portfolio, just like exchange traded funds or index funds. They're almost the same thing. It's just the trading structure that is different. So that's ETF. And what are the different types of ETF? We have, the popular one that everybody knows. We have the one that is S&P 500, all the top 500 companies. Thank you so much for the likes. All the top 500 companies in the United States, everybody knows that one. It's pretty popular. Has returned between 8 to 12% in the past 10, 20, 30 years. Averagely, last year it returned 18%. It did return 18% last year. So that is the beauty of ETF, because you can almost be certain if it's returned that much in this number of years, right? Averagely, right? Always know that that's averagely. So there are times it goes lower, but then averagely over time, because we are not day traders, right? We are not buying and selling immediately. It doesn't impact us. That's why we look at the average. So if you're holding a stock or you're holding an ETF for 10 years or 5 years, you really don't have any business if it goes down or goes up, because averagely you are going to average over time. You are going, there are years where it will be 18%, there will be year it will be 25, it will be 30, and there's year when it's 4%, 3%. So but when it evens out, you realize that you are within the 8 to 12%, right? And that's what it has been with S&P 500 for the past 30, 40 years actually. So that is one asset class where when you get your income, you take some of that income, right? Let's assume I'll always say between 30 to 50%. A lot of times people always argue with me. I'm like, it is called delayed gratification strategy. And I'm not one of those people that will come tell you what I don't do. I walk the talk. So I say it and I walk it, right? So you say, I typically would say, people would tell you do 10%, 20%. If you can, do more than that. Do 30%, do 50%. Reason why I say this is that is the only way. Remember, assets is what gives you freedom. Freedom is actually the goal, right? The freedom, money is not the goal. Let's put it here. Money is not the goal, right? I am talking here not because of money. Money, not the goal. Money is not the goal. Not the goal, right? What is the goal? Freedom. Freedom is the goal. Freedom, which is financial freedom. Your ability to live life at your own term. That's the goal, right? So whenever, even regardless of how much you are earning, if you are earning 500,000, but it still require you still don't have control over your time, then you are not meeting your own goal, except you want to keep working and working, right? So having said that, so ETFs, right, it helps you spread your risk across board. That's the beauty. And then it is so easy for you to start up. Very, very easy, right? You can actually open your account today. This is 145. You can still open your account today. You can still open that account today, and depending on the brokerage firm, you can actually still fund it today and start investing before 3 p.m. right? Before 3 p.m., you can still start investing. That's how easy it is to buy ETFs, as easy as that. And then you can spread your risk. You don't have to start picking and choosing and say, oh, you know what, which one should I buy? You don't need to start watching any charts. No, you don't, right? So it is that easy. I always say that is a good way to start investing. Absolutely the best way to start investing, because I always hear that question. Yesterday we talked about ETF and real estate, right? We talked about that, and I say that it is both, right? Diversification is very important, okay? So another example, right? Another example of, or another investment I talk about, right? GL, thank you so much for the follow. Thank you for subscribing on the YouTube side as well, right? It's Money Talk with Dr. Lina on YouTube. So the other kind of investments, right, that will help you build wealth. Remember, income does not build wealth. Asset, that cash flow, is what builds wealth. The other one that builds wealth, right, after ETF is what? The one that builds wealth is real estate. Real estate is the other one. Just like the ETF, everything has got their benefits, right? It has their benefits, it has their downside. ETFs will give you the return. When it comes to real estate will give you 4 paychecks, actually 5 or even more. What are the paychecks that real estate gives you? It gives you, number one, it gives you equity. Let's assume that you buy a property, because a lot of time people always say that single family home or home property, like they always equate real estate to houses, right? That's what, but it's way more than that. You can, land is real estate. What's it called? Storage is real estate. Office spaces, malls is real estate. You know, all of those things are real estate. And by the way, they are owned with, like, some of them owned by individuals, group of individual companies. So always just understand that. So real estate, you buy a house, the common one. Let's use the example of the common one. You buy a house and then you rent it out to a tenant. You use the bank's money to buy that house, right? Then you pay a down payment to buy that house, and then you get a tenant to pay you rent it out using the 1% rule, right? So let's assume the property is 200,000. The 1% rule says that you the property should rent for 1% of the property value, right? So property is 200,000, rent should be in the range of like $2,000, the thereabout. Now per month, right? Because I know we have a global community here. So it will be in the range of 2,000. Now, because you also use the mortgage, you use the bank's money, you put a down payment, or you put a down payment and then you have to pay the bank back, right? That's leverage. You leverage from the bank. And then you every single month you pay some of the money that the tenants give you, 2,000. You use it to pay the bank, right? Let's assume the mortgage is 1,500 with the current rate at 6% and above, a little bit above 6%. Let's assume that the mortgage that you pay every single month is 1,500. The difference between the 2,000 and the 1,500 right there, that is cash flow. That is number one way that real estate pays you. Cash flow, right? That's the number one. That's the first paycheck that you get. Number two, every time that you pay the bank, right, you reduce your loan with the bank, and then you increase your ownership with the property, right? Because, and whose money are you using? Not your own money. You are using the tenant's money to reduce your loan, to pay off your loan, and at the same time, increasing ownership. Whenever you increase ownership, right there is equity. It means that you are reducing your loan, right? So think about it, the same example, 200,000, right? You use the tenant's money to pay for every single month, right? So it means that in a whole year, you would have paid off 15,000, 18,000. That's what you would have paid a year, right? Let's give it like 5 years. 5 years. 5 years would bring you to like, so 10 years is 180. So it's going to bring you like 90,000. Hypothetically, I know that, there's also amortization and all of that. So let's say 90,000 is what you have paid, right? The property is worth 200,000. 90,000 you have paid. That 90,000 that you have paid off is it's an equity right there in that property. Whose money was it? All of the 90,000 that you have as equity, who paid it there? Who paid that loan? It's the tenant. So you are using the leverage of the bank and using the tenant's money to pay whatever you've gotten your loan with the bank. And this equity, a lot of time people always say, yeah, but until I sell the property, the money is locked there. No, it's not locked there. If you want the money, you can easily take it out. There's something called cash flow refinance. Cash out refinance. There's something called ELOC, right? Home equity line of credit. There's ELION as well. That is also another form. So you can simply go and say, I want some of this money. They will give you up, depending on the broker or the company, the mortgage company, they could give you up to like 75 of that amount, of that 90,000, which you can, guess what? Take the money and use it to buy your next property right there. That is the beauty of real estate. You can unlimited, right? Then number three, in terms of how the real estate pays you, number three is this one: appreciation. Appreciation simply means growth, if you want to understand. So whenever it comes to ETF, the appreciation that you get in terms of your money or growth, there's something called the rule of 72. With ETF, it says that your money will double its value every 7 years. So 7 years is what it takes your money to double, right? That is with ETF or stocks or whatever, but it could be lower, of course, if the return on the investment is really high. So if the stock is going up so quickly, right, it's going to be the years will be shorter. But on the rule of thumb, right, you can Google it. It's called rule of 72, right? That's what it takes to double. However, when it comes to real estate, there's also the rule that if you buy it right in the good location, the property will double its value every 10 years, right? So it gives the growth, bringing it to like average of 10% growth every single year, right? So 10 years. So it means that your 200,000, using the same example, your 200,000 is going to become 400,000 in 10 years. But on top of that, you've also gotten some 90,000 in 5 years. So almost 180,000 in 10 years in terms of equity. And of course, you also enjoy some $500 in terms of cash flow, which is additional money. So it's not just you double your money alone, you also get equity. That's like tripling your money. And then you also have cash flow. It sounds like, ooh, how is that true? Yes, it's the reality. How do I know? That's because I own and manage double-digit real estate portfolio, right? And the property that we bought 2017, July 2017, has already doubled its value because it's also in the very high end of the AB neighborhood, right? AB neighborhood, right? Because there is that different neighborhood has different class. There's the A, B, C, D. D being the ghetto, right? A being the best in class, right? The premium of the premium. So that is it right there. Then D is what we are all doing tomorrow. If you have not done it, the deadline tomorrow: tax benefits, tax deductions, tax credits, tax, all of that. You see this one, that's like almost like a lot of times it could be the biggest that you can get with real estate, because every single time there's so many things that you can claim, including the property taxes that everybody always worry about. Oh, my property tax is high, my interest is high. You can actually use it, especially if you have that income on, you are in that almost 26 to 28% bracket, tax bracket, or 30% tax bracket, because your income is high. You realize that you are paying a lot of money, right, to IRS every single year. If you want to reduce how much you pay, right, real estate is right here. These will not help you, right? These will not help you. And guess what? That's how you build wealth, right? These are strategies. Remember, it started from high income will not help you to build wealth. It supports you, but it's what you use with it, right? But what helps you build wealth is asset that cash flows, right? So these cash flows, depending like a dividend, right? And some other ETF will give you some cash flow, right? But at the same time, also give you growth, right? It gives you growth, it gives you cash flow. Thank you for tapping out the live. Thank you for the follow. Thank you for subscribing on the YouTube side. So this is the and there's the other paycheck that I most of the time I don't talk about. Is leverage. Leverage. The fact that you are using the bank's money and the tenant's money or whatever, it's not the leverage that comes with real estate is absolutely amazing. With 50,000, if you are doing an investment property, 50,000 is the highest that you need, right? Down payment that you need to own a 200,000 asset, right? 50,000, that's all you need. If you are using an FHA loan, you only need about 12,000 to control a $200,000 property. You can never there's no way you can go to the bank and say, or an investment house and say, oh, you know what, I want to buy ETF worth of 200,000, but I only have $12,000. They'll be like, okay, where's the rest? that option is not standard. It's not there. Even though I know that the wealthy, there's a way they leverage that, but to the middle class and all of that, the leverage is not so much. You want to buy 10,000 of ETF, you better have your cash of $10,000. However, when it comes to real estate, with 250,000 or even less, you can own 1 million in terms of investment property. Okay, because you only bring 20% down. 20% is what is required whenever you are buying an investment property, and of course your income, and if you are using a DCSR loan, the income of the property qualifies that property. So they're not looking at your income, it's not impacting your DTI, your debt to income ratio, DTI. It's not impacting all of those kind of things, right? So that is the build. That's a second asset. So you're wondering, so if income does not build wealth, so what then builds wealth? Cash flowing assets. What asset? ETFs, right? Like the Nasdaq 100, the S&P 500, the dividends, the REITs, right? All of that helps to build wealth, because like S&P 500 returned 8 to 12%. The Nasdaq 100 returned between it returns 18 to 20%, right? That's what it returns. Dividends also does decently, okay? And of course, there's the REIT that also does well. I mean, I typically talk about those four, but there's more, way more than that we are also putting in the portfolio, okay? And then real estate is the other one, right? Which I just talked about, paying you five or even six. And then the last one is businesses. So, like, you can get franchise of McDonald's. You can buy franchise of of Popeyes, any of those restaurants. You can actually buy laundromats, all of those kind of businesses that you can actually start investing on. Anything that does not require you to be there, but then your sleep is generating money for you, right? Any of those kind of investment, that is what is going to help you build wealth, not your high income. But the only thing that your high income does, please do not despise this, is when that high income, if you take it and utilize it and you put it towards cash flowing assets, and you put cash flowing assets, not appreciating cash flowing assets. It's called ACA. But all you do is take that income, right? That your income, and you use it towards DLL, depreciating lifestyle liability, right? The car that depreciates, you're not using it for business. That purse that is just seated there that you bought for $10,000, that does not generate money. That is a depreciating lifestyle asset, depreciating lifestyle liabilities. All of those things that you buy that doesn't generate anything for you, anything that takes money from you, right, but does not give you money in return, is not going to help you build wealth. What helps you to build wealth is asset that cash flows. And I've just listed these three out here, okay? Because you generate money. Either you are there, you are not there. You generate money, with real estate. You are there, you are not there. It will generate money with ETF. ETF does not even require you to do anything. That one is just hands-on. Fix it one time, get it automated, done, and you're good. You should be looking at it from time to time. That is what ETF does for you or can do for you. Real estate requires to go there in terms of, I call it passive active, right? Because it requires you a little bit to get the tenant in. Like, I was just coming to show a house to one of the houses that we're trying to get occupied. I just came back, and that's part of the reason why I'm here at this time. So those are really the assets. JL, Mayaliste, Boki, G's, Benny, yeah, and AAQ, Goldie, Kumara, AAQ, all of you. Yeah, so basically, I don't know why I can't see the names of everyone, and those that are on YouTube as well. So, high income, it will not build you wealth. Asset that cash flow, ETF, real estate, businesses. If you want to build wealth, right, and end the paycheck to paycheck cycle, right? End that rat race, that job that you don't, that's what you need. And you have to start working on it immediately. It's almost like delay your gratification. So save about, so if you are wondering, so what's like the next step? Now I know this. What's the next step? How do I, now I'm pumped. I know that, okay, this is what I need to do build well. Number first thing I will tell you is it starts with your mindset shift. Okay, it's mindset first, right? What does this mean? It means that that income that you think you have, it is not all for today. It is not for lifestyle inflation. It is not for that. That salary increase you got, it is not for you to also increase your living expenses with it. It's for you to keep some of those money. I would typically say 30 to 50%. And you might be like, oh, how is that even possible? Even if you cannot get it today, let it, if you set a goal, set a goal. Then you always hear me play music. Set a goal, make a plan. Set it as a goal and a plan that, okay, you know what, I would achieve this in the next, how many, next year. So whenever you get a salary increase or you change your job or whatever, your lifestyle will not automatically increase. You know that that extra income that you have, it's towards what? Wealth building. It's towards asset, not for lifestyle, not DLL, for appreciating cash flowing asset. So you pack it, that bonus that you get, right? You pay yourself a little bit, treat yourself a little bit, but then 90%, 95% of it, that bonus, put it towards another asset, right? So that you can look at yourself and you'll be like, okay, you know what? That bonus of last year, this is what I did with it. This promotion that I got, okay, you can see this is the house, right? And and once you see it that way, or oh, I bought 10,000 worth of ETFs with it, right? Or I bought 20,000. People get bonuses, right? That bonus of last year, this is what I used it for. And you'll see that, and you'll be happy for yourself. And then you can say, okay, you know what? If you're somebody like me that moved from so many jobs, like I've moved like maybe 5-6 times into almost 2 decades in my career. I've moved severally, like almost 6 or 7 times. Not because they laid me off, but that is an avenue for me to grow quickly. And I rose up to the level of a vice president of technology, right? So what that means is every single time that I move and I get a pay raise, I must be able to look back and say that, okay, you know what, this number of years that I spent here, right? This number of years that I spent here, this is how much I used. I mean, this is the house for it. This is the asset for it. Like I can tell you, okay, I did 8 years in Procter and Gamble, for instance. Oh, with Procter and Gamble, oh, I have this number of stocks, stock option and all of that with Procter and Gamble. This is my 8 years. It's 100,000, 8 years, or 200,000, 8 years spent there. Okay, this other company, I worked with this other company. Oh, my number of years with AIG. Oh, this is how much I spent there. Something of that nature, you would say, oh yes, this is what okay, it's that house, it's this house, this is the asset, and it doesn't have to be much. It really doesn't have to, but it comes with the mindset. Always think about it. I always try to tie things. Thank you all for tapping out the light. Thank you so much for tapping out the light. So always remember, income is your starting point. I always try to talk about this mindset. That's a world coach in me, right? It starts with your mindset. When we just recently had, over the weekend, we had the training on real estate. And the first 10-15 minutes of that training on real estate investing, right? It's called the real estate bootcamp, right? Buying your real estate in 90 days. The first 10-15 minutes was all about investing, all about mindset shift. Because if your mind cannot conceive it, you cannot achieve it, right? Because it took me to say that, okay, you know what? I'm going to own a double-digit real estate portfolio, and I'm going to do it over this number of years. Even if anything would take me, even if it takes me not to change my car during that time, I'm not going to change it because I've not met my goal. But then if I meet my goal by year 9, absolutely, I am going to get that car that I want. So, and that is the mindset, because you have a goal in mind, right? So change the mindset is number one. If you can, what is that your goal? Even the Bible says, write the vision, make it plain. What is your goal, right? What is your goal? You want to build wealth. What is your goal? What is your peace wealth? What is the goal? What is the health wealth? What is your goal? Your time wealth? What is that goal? Your money wealth? What is the goal? Some people don't even know. Do I ever want to be a millionaire? They don't know. Do you want to have 500? You don't know. And that is what is determined, or that's part of the factors where some people are just working. They are just working every day. They just working. They just wake up, work, and trade their time for money, and then they work to 65, and they realize, oh my goodness, what did I do with my life? Now I've shifted my hat from the wealth coach, right, to back to teaching. Back to teaching, even though I love that part so much. Well, wealth coaching, analyzing it for you, mindset. I love it. I love that part. So your income does not equate well. We've established that. Take some of that, your income, ideally 30 to 50%, right? I don't know how 30 to 50% should be your goal. That income, 100,000, that's 50,000, 200,000, 100,000, 400,000, 200,000. That is what you're going to use towards this. If you want to end the paycheck to paycheck cycle, you want to step up the hamster wheel earlier than or even if you don't want to, right? You just want to you want to live life at your own terms. Think about the peace of mind that comes there to know that, okay, you know what? Even if I work, I don't work, I am making 6 figures. I have 5 houses. It gives me the rent of $2,000 every single month, and that is 5 houses. That is $10,000. I am okay. Think about that peace of mind that comes with that. The only thing you have to deal with is vacancy. Okay, make sure that the house is fully occupied. Make sure they take care of your house and all of that, and the taxes that comes with it. That's it. That's your 6 figures right there. So always think about, take some of the 30%, 50%, delay the gratification. Let every other person be doing whatever they're doing. But you take your money and use it to put it into asset that generates money for you. Okay? So think about it. I want us to, for a second, 1 second. Are we here? If your job stops today, would your income continue? If your job, my job, stops today, would your income continue? Would you be able to take care of yourself? What happens to your family? What happens to that lifestyle that you have built? All right. I don't need the answer. You know the answer. But that is what determines. I want you to think the 30,000 people that were laid off in Oracle 2 weeks ago. Trust me, it was not planned. It's just you and I. Some of them are way better, more intelligent than you and I. They are way more intelligent. They are, they exceeded expectation. They did not just meet expectation. A lot of them were not on performance plan. They're not on PIP. They were high flyers. But guess what? They are all out of looking for. So if it happens, are you prepared? That lifestyle that you have built for yourself. That's more reason why. Don't delay it. Start it. Okay? Start it immediately. And that's why for me, I focus on this, right? I focus on 4 pillars of wealth, right? To help professionals. So assets, right? ETF and real estate. And then we are building around businesses as well for additional diversification. Once you have built this, it starts with your ETFs, right? Because it's very easy to start to build your capital. Then once you have built your capital and your capital, you have your 30,000%, 50% of your income, it's on ETF, it grows, right? Every money must be working other than you do. Then you start, once you build the capital sufficient to buy your real estate, you start funding your real estate, you do it again, you rinse and reapply, right? You do it the same thing. Year 1, you do it, or it takes you 2 years to do it. Year 1 or year 2, you do it, buy it here, then you start building here again, right? Your Roth IRA, you are funding that. Your 401k, you are funding that as well because you are funding for your future. Then you have the brokerage is going to have these ETFs right there. And of course, you have your IU savings account for your emergency funds, right? start with 1 month, then you have your 3 to 6 months as well. So all of that taken care of first before all of this. You don't even have any business in investing if you have not taken care of your emergency funds and any high interest debt that is above 10%. You don't have any business in doing this. So go take care of those foundation first. Those are foundation, and then you start laying the house, the bricks on the foundation once you have taken care of that, right? And that's what reason. And you'll be wondering, so how do I start this? Because that's the other thing I get from people, right? So how do I get it, right? I'll be hosting an ETF training. It's basically not ETF training, investing workshop. It's going to be coming towards the end of the month. The date is not yet finalized because it's going to be a workshop. It's definitely a workshop because we want it in that place. You open your account if you can. If you've already opened your account, you fund it right there. You get all of the understanding of everything what sort of assets should you buy. We will talk about it. Everything that you need to beginning how to set it to automate it. We'll talk about automation. We'll talk about funding. We'll talk about all of the mindset shift is also going to be there. And of course, we're going to be doing execution. Like it's going to be hands-on. So be ready. Have your money on the side. Have your money on the side because it's to get you started. Because I'm a doctor and I know a lot of people, they go through trainings. We'll talk about all this things. I've talk. And I've gotten to the point where I say, no more, less talk, more action, right? Because people would listen, but they do not execute. And until you execute, you're like, okay, I'll do it tomorrow. Procrastination. Oh, it's next week. Before you know it, trust me, it's already, guess what? Where are we now? We have already gotten to Q2. This is April is almost ending. Before you know it, school is going to end in May, right? Once school ends, we are all rushing to summer. Before you know it, it's going to be Thanksgiving. And then this year is going to pass again. And then you're like, oh, I really wanted to invest. But now I'm saying, no, if you come through my path and you are very serious about investing and changing your story to build wealth, because that's the goal, build wealth, all around wealth, then you want to be a part of that training because it's going to be hands-on in there. You're going to set it up. No, because I'm not your financial advisor, okay? I'm not your financial advisor. I tell you what I do, then it's all on you to decide what you want to do, okay? Essential planner, right? But good point right there. Yeah, I tell you what I do, and it's on you to go do your research and do it, right? I will tell you, everybody knows S&P 500, right? S&P 500 has returned between 8 to 12%. It's a known fact, right? You have that information right there. You can go on Google and research it yourself. So I'm not one of those that will tell you what, and that's why I don't teach single stocks. How do you look at this chart or that chart? No, I don't, right? I don't teach that because I just see what is basic, right? What is your basic? This is where the wealthy put their money. S&P 500, the top 500 companies in the United States. You go and look at it yourself. What has it returned? Go on Google right now. 8 to 12%. Is that comfortable with you? If you are comfortable with that, absolutely go ahead and invest in it. If you are not comfortable with it, absolutely do not invest in that. Okay? But then at least you open your account, then you make your choices based on the information I provide, and then you would also, that's why it's a workshop. It's not something that we are going to be talking about this, right? No, you're going to search it inside, you check it, NASDAQ 100, S&P 500, it's pretty decent. I don't do risky plays, right? I have lost money in the stock market. I lost over close to $100,000 buying penny stock, doing day trading. I do not advise anybody to do that. Cryptocurrency, options trading, you will never hear that from me because here it's about building generational wealth, right? So I have gone to do the research. Where does the wealthy put their money? They put their money in ETFs, index fund, real estate, right? That's number one and two. Then businesses. Then they have things like arts and antiques and all of that, which I don't know anything about. So I stick with the number 1, 2, and 3, right? Those are the three things I stick with. Now, which one specifically, whenever they talk about ETFs, that is what I talk about, and that is exactly where I put my money. In my own portfolio, I would exactly where I put my money is what I talk about. That's why you don't see me talk about certain ETF or stocks, or when people are asking me, I'll like, no, yeah, all right, great, but very, very great insight. So I'm doing that workshop. Be on the lookout for it. It should be anytime before. I'm trying to make sure it's before the end of the month, so that before the holiday starts and the whole summer thing and you start doing your vacation, you know that you have already paid yourself. All right? You've paid yourself. Always remember, pay yourself first. What does the pay yourself first mean? So far you can pay taxes and you are paying for your health insurance. Then when it's time to pay yourself, okay, you really don't have any excuses why you should not pay yourself. Why you should not use some of your money to buy, even if it's just S&P 500. At least we know that as return, averagely 8 to 12%, averagely for the past 10, 30 years, 40 years, averaging. Go on Google right now. I always say, whenever you see something, because I've been burnt as well, trust but verify. Go on Google and go and check S&P 500. How long has it returned averagely? For how many years? Go and search it yourself. Then the other thing I talked about, where does the wealthy, the multi-millionaires and the billionaires, where do they put their money? Go and check it yourself as well. All right? So, that is it here. So if you want to be on the lookout for the training, for that workshop, so that you can get registered and be a part of it and start building wealth the right way. Okay? Building wealth the right way. Then the second one, which I always get questioned, real estate. That's the big, it gives you a lot of money, right? It does. It has blessed me. And that's why I'm very, I can talk about it boldly, right? It's been a blessing, okay? But you have to get sufficient knowledge for this one, right? It's not like ETF. ETF, when you sit down, we open it, you just need to know what you're buying and all of that, and you're fine, right? But then when it comes to real estate, it's a whole lot. And last weekend, just to make sure that because I get a lot of DMs, real estate, right? Just to make sure we did a training. So I have a training boot camp, right? We did add a training boot camp, and it was all about real estate. And we have module 1, module 2, module 3, module 4. So if real estate is, so for instance, you've already built your capital and you want to invest in real estate, you can actually purchase that boot camp. It's going to help you. It has the video. It has the video. It has the solid slides presentation that comes with it. It has it has access to the closed group where you can actually come and ask questions. And a lot of, if you have been following me or you are just meeting me for the first time, you would probably have heard that whenever I'm buying properties, I'm buying it not more than 80%. So I would typically, for every property that I buy, except for the first one that I bought, every property that I buy, I must have at least 20% equity in it. What does this mean? I buy property, 200,000 is worth 300,000. I buy property, 240,000 is worth 320,000. Why? I use a strategy called through the wholesalers, right? So those are, I will be, you need to be able to understand. Wholesaling is one of the strategies where the individual, there's an intermediary that buys from puts a property on a contract with a motivated seller, and then he brings it to investors like me, right? Real estate investor, I will buy it at a deal, right? Because it's lower than the market value, right? It's definitely lower than the market value that, I already have a lot of equity in it. All I have to do is, it maybe requires a little bit of fixing, right? 5,000, I'm done, right? Few days, I'm done. Put it in the market and rent it out, right? So those are strategies, and those are some of the deals that will be going into the community. If you have questions, you have issues with rehab, and most importantly, networking, because you have like-minded people that, people that have already bought, people that want to buy, what are their issues. You have people, you can do meetups, because you probably will meet people within the community, like-minded people that are buying property, and I'll be there as well if you have some questions. So the boot camp, real estate boot camp, module 1, module 2, module 3, module 4, with the access and of course the slides. So if you are one of the people that you are more visual, you can have the slide, or you have the one you are more of audio, you want to hear me talking and all of that, you will have that as well. So you can take it at your own time. You need to see the reviews, right? It is very, very hands-on, and because you're going to be learning everything that I have learned in the past 10 years. I mean, over 10 years, actually. Over a decade is what I've been investing in terms of real estate. Over here we're almost talking about 2 decades when it comes to the stock market, not necessarily ETF, but in the stock market, and the investing, but real estate investing over a decade for sure, right? And then it's not just me owning it, it is also managing it. Because if you buy a property and you just give it to a property manager, you might not, property management, you don't know much, right? You just know the buying process. But I know the good, the bad, the great, and the ugly, evictions, and all of those things, how to handle it, when to handle it, how to trigger it, all of those kind of things are the things that I have in there showing you. So if you are really interested, in changing your story, in making your income now become wealth, right? Because you are taking some of this money, some of your income, you are using it, some of them to fund the lifestyle, but you are also using some of them for the appreciating cash flowing asset, which is what you have here. ETF, real estate. Real estate is what I just talked about. You can find the link in my bio, right? You can find the link in my bio. You would see it right there, and I'll show you so you can, you will be able to find it right there. Where is that? Where is TikTok? So right here, you'll see it right here. If you go on Institute right here, I click it, you click on open anyway right there, you would find it this is playing on me right here. That's it right here. And you can just buy it. Right now, we are doing it at almost, is this 60% discount? Like 60% discount. For next week or by the end of Friday, it becomes a regular price. It becomes regular price. So if you want to take advantage of that, to start building your real estate portfolio, because I started with one, and then my whole story was I was doing 529 for the kids, like every other person, making sure that kids have good head start. But I realized that the money was not growing, right? And because of that, I just said there has to be a better way. And I was like, okay, and I heard about real estate. And I'm like, okay, real estate, it pays you in 4 different ways. Okay, definitely it's better cash than 529 that I was seeing. And I said, okay, let's try it with one kid, right? It's not like we put the name of any kid, but let's just start buying one. Then we bought one. I was like, oh, okay, all right, I can claim tax deduction. It reduces my taxes. Oh, all right. And I'm like, oh, okay, it's increasing in value. That's actually my story with real estate, right? With ETF, or it was because I lost money in the stock market. That's where I tried to figure out where, right? That's how. But with real estate, it was strictly as a mother with passion, wanting the best for the kids, but did not know how. 529, I had 529, I had UTMA, I had all of those things. I'm a chartered accountant, so I'm financially savvy. I know all of those things. But then doing it the right way execution was my problem, right? And that's how I lost close to like 100,000 doing day trading, and penny stocks, right? And a little bit of options trading, right? But then with real estate, I needed to get it right. I paid over $1,000 whenever I did the training because I knew it was the kids' money. I cannot afford to lose it. I cannot afford to lose it the way I lost close to 100,000, and that's why I went for the training. And guess what? We did not just build when we realized that okay, we did for kid one. We started doing it for the kids, and we saw that it was working. We're like, okay, this is actually more than whatever we thought. This is actually a wealth building tool. And over last year, up until a few months in towards the end of last year, you probably will not even see me on social media. People are still wondering why that I'm on social media, right? The reason is because I had tenants start having, a tenant that had been in working for 20 something years in a very, very top 100, 500 companies, right? Making decent money, lose his job, and in 2 months we were talking about eviction. And it was not just one, a lot of people knew about, a lot of people got laid off and they're still being laid off right now, right? Especially in technology space, right? And that was when I said, oh, there has to be really, I'm very solution driven and value adding person. So I said, okay, I need to teach more people what I know. I cannot be selfish. And that's the reason why I started teaching this, right? I started teaching about, what I have learned, okay? So basically, you would have, for the real estate, you will be, right now is at, it's at, actually, it's at 60% off because the price right here for the people that actually did the live training that were there. And at the same time, it's not just they were there, they were, it was 2 days, it was a whole boot camp and all of that. So you are enjoying the benefit of some other people right there. So if you want to take advantage of that, you would see the link, or you can send me a DM, I'll send you the link, but you would find it in my bio. For the people on YouTube, you would find it right there as well. You can go on my Instagram page, you will find the link right there in there for you to click on, and you can start buying. And if for those people that buy it right now, that gets to get that right now, you would also get a strategy session. In that strategy session, it's going to be free. It's going to be this weekend on Saturday. Going to be for the first 3 people, right? If for anybody that does it right now, it's called the Real Estate Boot Camp. It's called the Real Estate Boot Camp right here. So buy your rental in 90 days, rental property in 90 days. You would see it right there. And if you want to get a one-on-one consultation, these you would also find it there. But then my ebook is here. But the rental, that boot camp, it's going to give you can study it at your own time, at your own pace. You don't need, if you are one person, if you are like me that always like my own pace, I want to refer to things because it's pretty detailed. It is absolutely pretty detailed. So for the first set of people that if you are really interested, you can, you should, right? Ensure you get it now because you also have your strategy session for free, right? On Saturday, you would have your own strategy. Put in the comment, done, once you're done, and then I can definitely invite you for the strategy session. It's just going to be for the first 3 people that gets to buy it. That gets to buy it, the first 3 people. So buy your rental property in 90 days. And for the ETF workshop or the smart investing workshop, be on the lookout. The invite will be coming out soon. So you can get everything set up. So if your goal is that you're still building capital, right? Or you are just starting, then you can start here. We'll talk about your emergency fund. We talk about so many other things. But then in the workshop, it's going to be hands-on, where you get it done right there, right? But for the people that you have already built capital, you want to start real estate, you don't know where to get started, you want to definitely get the course, right? It has module 1, 2, 3, and 4, right? You have the slide, you would have the presentation, you have the videos, and at the same time you would have access to the closed community where you can ask questions. And then even in the closed community, you would have access to deals, like deals that I always talk about, where I am getting it 20%, you're getting 80% equity, and you're learning from someone that at home and manages double-digit real estate portfolio, and you can ask questions in the group. And on top of that, you would also be a part of the 1 hour strategy session, right? So you have any question or whatever, you can have it, right? And right now is at $69.99. And but then once it's the end of this week, by Saturday, the price goes back to the regular price, which is $199, right? The price right now is for the people that even did the live. So if you are buying it right now, you are getting the benefit right now, right? Of the people that were in their life. But then that's why, but by Saturday, it's going back to $199. It's going back to $199. All right. So get it. And at the same time, you're going to get the strategy session as well. Free strategy session where you can ask any question. Mayalistic, are you Bruno? Somebody was asking me question. Digital content creation. Are you Bruno? Somebody sent me an email. I thought that was you. I'm not sure. I'm not. Somebody sent an email, and I was asking yesterday, but I just wanted to make sure. So you still have a few more minutes. I'll stay here for another 7 minutes. Okay. So you can get access to it. You have full asset, lifetime, one-time payment, lifetime access, right? You make the payment one time and you are on your way to unlock wealth. That's exactly what I did over a decade ago. That has built me not just a million, well, let's say multi, right? Multi. But it just started like a play like this, like, oh, you know what? I want to do this. I want to do this. And if you want to see the trading, I tell you, if your goal is to build wealth, you should get it, right? If your goal is to build wealth, ensure you get it. Even if you are not ready, you can always have it now, and then you go back to it. You refer to it from time to time. Yeah. All right. So this is, and for anyone that buys it here now, put done, and then or just send me a message, and you can definitely be a part of the strategy session. Be a part of the strategy session, and also be on the lookout for the ETF training, the Smart Investing Workshop. That is coming as well. Smart Investing Workshop. That's coming there. We also have the Wealth Building Academy, right? That covers multiple things. That's also coming, and the $1 Million Community. The $1 Million League is also coming. That's the community. So because I don't want any situation when anybody would say, oh, you know what? It's because I don't know this. That's why I'm not building wealth. Really? You don't have an excuse. Really? You don't have an excuse, at least. And that's why I'm actually doing the Smart Investing Workshop. It's not an academy. It's not a book. It's a workshop. Like, it's very hands-on. So you don't have an excuse to say, oh, you know what? This is the reason why I don't invest. Because I get a lot of DM every single day. And I'm like, just do it. So the workshop would help you. That's what the workshop is. So be on the lookout for that. However, for the real estate bootcamp, right? The real estate bootcamp, buying your first property in 90 days. So by summer, you could be a property owner, right? It tells you the step by step. So you can see whenever you're buying, you would see all of the breakdown, what it entails. It starts with your mindset. It starts with buying method, all of the different tools that you can use. So from Rentometer to Zillow, all of the different tools, your mortgage calculator, all of those kind of things are there. Everything that you need to get started. Everything. And of course, you would also have the opportunity, because you're just doing it the first time, to ask questions from time to time. Okay, this is where I am. I just found this deal. Is this a good deal? Right? Is this location? Because you also want to buy at the right location. Location is location, location. So especially if you're a first timer, you must ensure you buy this, ensure you buy the real estate boot camp, and not just buy it, watch it, listen to it, read it, right? Sleep with it, dine with it. I tell you, because you have everything that you need right there. Everything you need right there. Okay? All right. So I would be here for another 3 minutes. Anyone, you can still buy it later, but then for the people that buy it live here would also be have a 1 hour strategy session. 1 hour, right? It's not going to be one-on-one. It's going to be with every other person that have been that gets to buy. So it's not going to be a one-on-one, but every other person. So maybe like it's going to be 1 to 5, 1 to 6, or something like that. So it's a strategy session. All right, all right. Well, I hope we all agree our income does not equal to wealth. What helps you to build wealth is take some of the money, put it in asset, and that asset would help you build wealth. So it's instead of you taking the money, putting it towards lifestyle, take some of the money, take some of it, put it towards asset. Then asset like ETF, real estate, then put it towards then the asset will give you the cash flow. All right. And somebody just made purchase. Who is that person? It's put done so that I can send you the strategy session, the link to the strategy session. All right. I'll be out of here in 2 minutes. I'll be out of here in 2 minutes. So if anybody wants to still claim it, it's one-time access, one-time payment, lifetime access. All right, one-time payment and lifetime access. So now is the opportunity to take it. You've been wanting to buy real estate. You've been wanting, how do you buy it? What are the strategies? Because there are different strategies. Real estate will give you, aside from the payment, there's real estate as a business. So aside from the long term, there's also the other. You can use it short term. You can use for group home. Those are different. So many strategies, right? But how should you know the right strategies? You will find it in the boot camp right there. You would definitely find it in that boot camp right there. All right. So buying your property, your rental property in 90 days, even with a 9 to 5. So I am doing it as a vice president of technology. And at the same time, I teach AI because I'm also a professor. I lecture in the university teaching kids AI, cybersecurity, and deep learning, right? So if I'm doing that, running a family, and I'm still on managing double-digit rental portfolio, it just tells you that with your 9 to 5, you can undo one. You can definitely undo one. Okay? You definitely. So you are another thing that a lot of people always say is down payment. All of the different strategies, how you can buy with little or no money in your pocket. You find it in the boot camp. You would find it in the real estate boot camp. Those are everything we talked about. The financing options, your credit, all of the 5 C's of your credit, you find it there, right? To help you make sure that you get a good rate. You would find right there in the real estate bootcamp. You buy your property in 90 days. It's 4 modules, okay? 4 modules. Module 1, 2, 3, 4. You have access to the video. You have access to the slides, to the presentation, and then you also have access to the closed community where you can have deals that are like 20%. You have 20% equity from the front end. And then you would also have a strategy session. All right. So congratulations to those that, to the person that actually claimed that opportunity. Please send me a DM. All right. Send me a DM so I can actually send you the link, the time for the strategy session. Okay, awesome, awesome. Well, thank you all. If you have any questions before I go, any questions, any question? All right. If there are no question, well, thank you for hanging out with me today. All right, my holistic digital uh, content creator. I don't know why it just shows me a few people, but I know that I have more people here, and of course some, and my YouTube community as well. Thank you. If you haven't subscribed and if you haven't followed, consider doing that. I mean, not consider, just do that. Let's all consider. Let's do that. Okay. All right. Make sure that your money is working harder than you do. Take some of your income and put it towards appreciating cash flowing asset. Send me a DM, or you can definitely find the link in the bio. If you, for those that still we want to buy your rental property, you find the link in the bio, or you want a one-on-one private consultation, you find it right there as well. All right. Well, I'll see you later. Ensure your money is working harder than you do. I love you all. Bye. Bye. All right. If you haven't subscribed, do that. And I would see you later. Have a good one. Bye.